All right, chums up, man. Let's do this. Welcome back to the Sleeping Tiger channel. I am the Canadian. First off, I wanted to apologize for my inconsistency with these videos. Again, I do these videos mostly for myself and to try to build a community. But I do want to apologize because I had wanted to be more consistent with the publishing of videos. So, sorry. Um, but what I wanted to talk about, just to draw some real quick attention, is to some old news here from back in all the way in October 31st. Um, if you reference back to one of my first videos, I talked about how we're experiencing some issues in the repo market and the Fed's having to inject funds, and how I could see banks using this as a excuse or a reason to push back onto some federal regulations in regards to the reserve requirements. And so the Wall Street Journal on October 31st writes about a Fed proposal to loosen capital and liquidity requirements for large U.S. banks. And if you read further into the article, they talk about how some of these regulations would be non-existent, like they just completely walk them back. And it's important to keep in mind that these regulations were imposed originally as a requirement to correct or to prevent previous liquidity issues we had in the last recession. So, just keep an eye out on that. I'm not saying it's going to be something that triggers the next recession or anything like that, but it's certainly interesting. But to switch gears over, I wanted to talk a little bit about FHA loans. And so in the background here is just a small, really simple Excel spreadsheet I made for myself when it came to analyzing rental properties or, a first-time home purchase. But I just wanted to do like a really highbrow view of an FHA loan and, for people who don't know what that is and, some tidbits of information about an FHA loan that could, spur you to do more research and maybe inspire you to go purchase your first house. But anyways, an FHA loan is FHA first off stands for Federal Housing Administration, and an FHA loan is a loan that is issued by an authorized mortgage lender, so somebody who's, legally allowed to issue loans. A federally backed a loan to you that is federally backed by the Housing Administration, okay? So again, an FHA loan is a loan that is issued by an authorized mortgage lender and is federally backed by the Housing Administration. So it's a loan that's backed by the government. And because the feds are backing this loan, it allows banks to loan to essentially riskier borrowers, okay? And when I say riskier, I really am trying not to put any negative connotations onto it. It really just depicts some metrics that banks look at that deem you either worthy or not worthy to have this loan, okay? And so what are some of these, lowered requirements? Down payment and credit score. So it allows banks to issue loans to people who have low cash funds. And, maybe you in a previous time had really high debt to income ratio, whether it be through medical bills or credit cards. And so your credit score had suffered during that time. So the cash requirement for a down payment on a house using an FHA loan is 3.5%, which is significantly less compared to 10 and 20% for a conventional loan. And, typically banks are looking for people that have a 580 credit score or higher when it comes to these loans. Obviously higher the better. So what are some of the cons to this? This all sounds good so far. I can get a house for less cash and, maybe my credit score isn't, super great, that can increase the interest rate, but you still get a house, right? So one of the cons is that you'd also have to pay something on top of your mortgage, your insurance, your taxes. You'd also have to pay this thing called PMI, which is private mortgage insurance, which would also raise your monthly payment. Okay, so is it a drawback? Yeah, but is it better to be in a house, be that you're ready to be in your own home and to take on that responsibility? Yeah, it's great. And so PMI is a private mortgage insurance that is paid through your mortgage to the FHA, or Federal Housing Administration, who is backing your loan. Okay, and so you pay this PMI to your bank, and then the bank then in turn pays it to the federal government and goes into a pool. Should somebody default on their loan, the feds would, then return those funds to the banks. Okay. And so one way that you can have PMI removed off of your loan is if you acquire 20% equity in your house, which then kind of leads me into, like, when's the best time to take out a loan? Well, ideally you want to buy at the low of the market, but if you can't buy necessarily at the bottom of the market, you want to be buying during a time of appreciating value. And the reason why you want to be buying in a time of appreciating value, like housing prices going up, is because that means your property will appreciate and the equity that you have in that house will increase. And you could get to a point where you have 20% equity in the house and you could request from your mortgage lender, hey, can I have PMI removed? And they may have a process of appraisal or something like that to determine whether or not you have 20% equity in the house or not. Okay. But then that would get the PMI removed from your payment and could make your monthly payment lower. With the appreciating environment in real estate, just to go back onto that 20% thing, it could literally cut the time in half. I can't stress that enough, because being in an environment of appreciating real estate, that will increase your equity far greater than principal pay down. You can pay extra onto your mortgage in order to get there quicker. Most people don't. So just your regular payments go mostly to interest, and your principal pay down is significantly less. Let's say for $800 you pay to a property, $100 to $200 of that may go to the principal, and the rest of it goes straight to interest. Okay, so purchasing a house and expecting to get PMI removed from your loan is far easier during an appreciating market. Okay, so if you can remember anything from this, take that away. All right. Some other interesting points when it comes to FHA loans: there are limits on the amount you can borrow using an FHA loan. There are limits that you can borrow on an FHA loan, and those limits are based upon your county. So one FHA loan is not created equal to another. A certain county in California, maybe their max lending amount is $315K, and in another county in California it could be up to $725K. So when it comes to specific questions in regards to the maximum you can take out with an FHA loan, get a hold of a licensed real estate broker or a mortgage lender, okay, specific to your county. And so some personal notes from me about my dislikes and my likes when it comes to an FHA loan is that it's a great opportunity for families to get into their first home, or for aspiring landlords to build a rental portfolio. Maybe you're single, you don't have any children or a spouse that you have to appease with the property you're moving into. You can use an FHA loan to have low cash down payments to, every 3 years move into a new property and go into it yourself, take out an FHA loan, live in it, either pay additional to get the 20% equity into it, or wait for the capital appreciation so you have 20% equity into it, and then move on, refinance it to a conventional loan, do what you want with it, and go find another deal. Some cons. In my opinion, anytime the federal government gets involved in subsidizing a market, it creates a saturation in the market. Let's be honest, it's lowering a barrier to entry, so it's making it more possible for other individuals to be into it. So it'll raise housing prices, because demand's higher, and so the market becomes more saturated. I wouldn't say it's necessarily more volatile. I don't necessarily think it makes the market more volatile, although that could be a good correlation between those two. But a good example is our current situation with student loans. Most student loans are subsidized, and what it does is it provides a great opportunity for people to get an education, but I would say that there's less ownership on the individuals now to really, really mull over what they're doing with that education and those dollars. And I think if there was a higher barrier to entry, um, maybe certain individuals would take it more serious. That's not to bash on all students. I was a student, but and I had taken out a subsidized loan. But as Dave Ramsey says, left-handed puppetry, elf school, whatever. There's a lot of stupid degrees out there that aren't necessarily getting jobs, and there are some good degrees out there that people aren't getting the jobs for. There are many statistics out there that show that people get a degree in a particular field but aren't actually working that job. They're working a different job. So I would call into question whether or not they actually needed a degree to begin with. But that being said, pro education, let me tell you, but I'm also pro trades. We'll talk about that a different day, I guess, though. So again, just to summarize, I'm really for FHA loans. I'm really for real estate investing. If you guys want me to talk more about specifically maybe some more details about my personal experience with an FHA loan, I can use really generalized numbers and go over it that way, and then how I turn that property into a rental. Okay. But if anything else, I'm going to go ahead and just end that there. Anyways, I'm going to go ahead and just end that there. And I will talk to you guys soon. And, hopefully I'll make this video, the next video, a lot sooner than this one. Again, apologize.